Hello, everyone. I hope that you had a decent trading week thus far, right? If you traded today, you probably had a lot of trouble, right? Remember, due to the fact that today, right, we had no high impact news events, right? During the course of the day, that's why we had that, choppy type of price action, right? That's why we had the NASDAQ and the Dow moving in the opposite directions in the morning, right? However, right, we did have sequential SMT. As you guys can see right here, right here, we had Tuesday's low being left, right, in the formation of a failure swing, right? So we did not break below Tuesday's low on today, which is Wednesday. Price expanded higher here for the NASDAQ, right? We did break below Tuesday's low, right? Which is, well, we usually expect. This is the type of price action you would usually expect whenever we have sequential SMT, right? So whenever the asset class which breaks below the low will usually be the weakest, right? Unless we have a lower time frame sequential SMT, which opposes this one. So here, right, you can see that we did not break above this high, but we broke above this high right here. So when price was trading above here, this would be seen as a real market structure shift, whereas this one is probably underway, right? For us to see, right, or what I would like to see before we see any down moves, right, and pay attention to everything that I'm saying, right? We would like to see sequential SMT between this month and the previous month. Right, this is the previous month's high for the S&P 500. This is the previous month's high for the NASDAQ. This is the previous month's high for the Dow. Right, tomorrow we have a high impact news event, right, which is, it will be in the morning, right, 8:30 a.m. And then again we have another high impact news event, well, two more at 10 a.m. in the morning. So what is, SMT fill? Right. It's not just, it is not just, a random fair value gap. It's not just a random fair value gap, right? It has to be a fair value gap that was formed within a previous quarter, right? That's what would make it a SMT fill. So for example, let me drop down to the daily. It's not coming up for some reason. But anyways, right? For example, here we have a fair value gap, right, during Q3. Here, right, we have a gap during Q3. This is Q3, right, this is Wednesday's price action. Tomorrow, right, if, right, we see price dip into, pay attention to this, an FVG, which was formed on the higher time frame, right? It can either be the weekly, not the weekly, it can either be the 1 hour time frame or the 4 hour time frame, right? So if we, for example, see a fair value gap form, right, and say ES fails to drop into that fair value gap, right? But NQ does that. We could expect higher prices, right? Until, we see sequential SMT at the highs. Do you understand? Definitely don't want this to, be leaked. So just being a little bit protective here. So as you guys know, when we're on the 50-minute time frame, right, you need the daily cycle, right? That's what you need. So for example, right here, right, say for example, this fair value gap right here, you can see that it's filled. This is for just example, purposes. Here we had price trade, well, way below this fair value gap. Below this fair value gap, what happened, right? We had SMT, right? We had SMT. And now we have to do this again. Yep. So this gap right here was filled. This one was overfilled, right? And then we had SMT below it. Here, we did not have price trading within this gap, right? We did not. So right here, right, where you have this gap being traded into, pay attention, right? You have this gap being, traded into right here. So the opening of this gap would have begun in the previous quarter, right? Even though, right, this candle would complete the entire fair value gap, right? But due to the fact that this is the low, right, which began basically in the previous quarter, right? Whenever you see something like this, right, there are times when you'll see SMT with a candle that begins the quarter, right, and then you will see price like run below this low, but this candle literally began this quarter. This candle is actually the low of the previous quarter right here, right? That's what it is. And this is looking at it, right? This is the New York session. So this would be the low of the New York session right here. So here, right, during this quarter, what happened? We had price fill this fair value gap right here. And you've never heard about this before. Then here, we had price trade into this fair value gap, and then what happened afterwards? There was SMT. Right. This morning I went live on Instagram for a while. Right. I think like 3 hours or so. We were calling moves and all of that good stuff. We'll be doing that here, where we will be having sessions where we will just be, watching live price action, trying to anticipate what will happen. It will not be, you know, exciting, right? It will be boring. So don't come, expect, well, you'll get a few jokes in, sometimes, but more than likely it will mostly be boring. So right here within, this price action, you can see that this fair value gap was straight into, then there was SMT. Here, however, we did not have this fair value gap being filled. So this gap was not filled right here, but this one was, right? So there'll be times when also you will have, gaps over here, be, not being filled, while gaps over here will be filled within another asset class. What we refer to as a SMT market structure shift is this, right? So this is something else, right? It's the end of the month, right? So you already know that next month we'll be touching on these things a bit more. So here, right, you can see that on this candle, right, this candle right here, I'll use the crosshair. After we had SMT, right, this candle broke above this high. Can you see that? This candle broke above this high, whereas this candle did not break above this high. So this would be categorized as a actual change in the state of delivery. Right, until we transfer to WAP, we'll be, trying to not put the terms on the chart. So for you to actually understand this, you need to, be watching. You can't just screenshot something to understand, right? I'm not going to be writing this on the chart, right? Here, right, we can see that this candle traded above this high, while this one did not. This was an actual market structure shift, right? And remember that we also had SMT on the higher time frames, right? So now, right, pretty much, have you guys bored? So it's time to get into the real stuff. Right? So we'll be discussing, right, in detail, in great detail, we will be discussing a stage 4 setup, right? So we have setups, of course, which go up to 10 stages, right? Or 10 functions. But here, you'll be learning a model. If you can code, you can put this into code, and then it will give you, positive results. So the first half was just, discussing these, basic things. But now, right, for the people that stopped watching, got bored, have to be, implementing these security measures right now because getting good. Okay. All right, so right now we'll look at which this morning on Instagram I did talk about this setup live before the fact, right? Oh man, not sure how much you guys were there, but yeah. Matter of fact, I will probably be giving you guys a little bit more. Anyways, here this morning, right? We did talk about this, right? So this was sequential SMT, right? So we had the dollar index failed to break below this low, right? And to make this even better, it occurred on a new week opening gap, right? And the purpose of this, right, is just to catch an explosive move, right? It's not to, hold the trade forever. It's just get in and get out at, at least 3 hours and then hunt for another setup another day, right? Here, you can see that we failed to break above London's high, right here. This is London's high. Failed to break above London's high right here. Meanwhile, there was a new week opening gap right here as well. So now we're literally just discussing stage one, right? Right, so stage one would be this sequential SMT between the sessions, right? This is for intraday setups. So the first thing that you would look for is what? You would like to see sequential SMT between the sessions, right? You would, you should prefer to see sequential SMT on the lower time frame cycles, right? But it's not necessary. There are times when we will have certain specific highs being run out, right? There, and then whenever we have the formation of a precision swing point, once we have a candle to the right of that, if it's a bearish precision swing point close, you could enter with that and put your stop above the high, right? And you guys already know how we do our stops already. We don't need higher time frame PDRs or none of that, right? Swing low to swing low before the stop, right? Before the liquidity is purged, right? Your stop will be here. Or while price is here, getting ready to trade above this high, you could enter above this high, short above this high, and put your stop right here, right? We've mentioned this multiple times. There, you will not always have a chance to get back, in whenever we have the formation of a fair value gap, just as here. And these trades tend to be the best, right? Also, remember, so here, this is a precision swing point right here, right? What else? What's new? What's new that you don't know? Check these highs, these lows, and these highs out, right? So here, right, and I'll use the cursor for this, right? You can see that this was SMT, right? This was SMT. This was SMT. and this was SMT. So the times when you do not, and I repeat, the times when you do not need a sequential SMT on a lower time frame cycle would be in this case. But if there was a lower time frame sequential SMT here, it would be valid as well, right? So there are times when it will seem as if you will have a reversal, and it will seem as if there was no cracking correlation, but there was, right? There was, and this is what it is, right? So these highs and lows were SMT before the fact, right? These were SMT, right? But what caused this to be activated? Like, right? Liquidity was resting below this low, a lot of liquidity, right? Because the most liquidity rests below lows which are highs which were formed by SMT, right? These highs right here in the dollar, you can see, and this is why if you were on Instagram this morning while I woke up and we were talking about this before it happened, this is why, right? And we will be discussing this, in whenever we'll be doing this exact same thing, live whenever we move to WAP, because right now, there are people that I believe they clone the chat or something. So it's like I don't want to be helping them in any way, which is, why we do what we do. And, yeah, why the first part of this video, I was talking so much. Get them bored, let them just leave. So again, you can see that your euro, we have this high taking out this high, right? At the same exact time when the Great British Pound was failing to take this high. So this is important. You need to understand this is very important, right? We wouldn't see this happen if these highs were symmetrical, right? This is how you spot highs and lows with real liquidity, right? So these were SMT highs, right? SMT high right now. What happened after that? A precision swing point formed here, right? SMT high ran out. Lot of liquidity above this high. After this, what happened? We took out London's high. So due to the fact, right, that you have this, the SMT high. You put your fibs here from this swing low to this swing high, right? This swing low was formed within this fib value gap, which makes it important. And this swing low was formed right below the high of this SMT high. So right here, right, one standard deviation above, right, price trades above this, you become bearish. Right? Then what happens afterwards? We have, you have price breakdown. Precision swing point, right? You would literally, you become bearish soon as this candle, closes down and this one closes up. You could get in sync with, just the open of this candle. Price trades up. You would anticipate a swing point being formed. Then you have price breakdown. Sell side liquidity, sell side liquidity. So there's a lot of things here to unpack. Right? What qualifies this as a precision swing point when we had no lower time frame sequential SMT? The fact that we traded above the SMT high, right? That's why. This is not a regular high, right? This high was formed by SMT, which made it relevant. After, the dollar traded above this high, what happened? We had the pound trading above London's high. The dollar failed to do so, right? So stage two would be what? Precision swing point and price trading above an SMT high. So first you need what? A higher time frame sequential SMT. Then you need a precision swing point formed below SMT high. Or you could have a lower time frame sequential SMT here, where you wouldn't need the precision swing point or the SMT highs. Right? Here, also, right, you need to take in consideration that you do not want to see SMT opposing the direction of your trade. Right? So here, right, there is no SMT. Right? That's no SMT right here. Trying to make it easy to understand. Here, there is no SMT. Right? Here, what's happening? There is no SMT. Right? So this is, a easy way to look at it, where it becomes it looks like to the outside world a pattern, right? But here we have three stages, right? Three things that we must look for, right? So this is the higher time frame sequential SMT. Here you could either have a lower time frame sequential SMT, or this is more advanced, but you have to look for this, or begin to look for this, right? Look for highs which were formed by SMT being ran out and rejected, right? And after this happens, right? Well, even prior to this happening, you want to make sure that we have this, right? No SMT opposing the higher time frame SMT, right? This will become liquidity, right? Note that this, price didn't go above here and just drop. It just flew way above it, right? Usually, if there was another SMT here, then you would have price probably go above it. Then you have a lower time for SMT form, then it just falls back within the range. Why? Because of, this concept that we've begun to, discuss. So as you guys can see here, right, was what price wanted, right? But what activated price? What allowed price to gravitate to these highs and these lows? What did that? We had SMT, higher time frame, stage one, stage two, right here, which can either be sequential SMT in a lower time frame, or SMT high being ran out with a precision swing point, which is important, right? Then, right, you will have price be attracted to, these levels, which were not caused by SMT. This is a low resistance liquidity run, right? It could be better, right, if there was a SMT fill. But due to the fact that today, right, we did not have high probability conditions, right? And these markets are not high probability, right? But if you have, right, sequential SMT in the higher time frame And if you had sequential SMT in the lower time frame, right, and then you have SMT fill, and then the highs above were symmetrical, right? There was no cracking correlation that caused them to form, then you would expect price to gravitate to them, right? So, this is for, those that have been paying attention, right? And yes, stage two right here is comprised of two things, right? You need a high or a low, in this case, a low, right? Looking at the US dollar, which was what? What caused the formation of this? It was caused by SMT, right? So we had SMT here, price traded, wicked here, then it fell below precision swing point, liquidity secured, price goes up, no pullbacks or anything. What else would make this, you know, something to look at? You had the precision swing point here form on a new weak opening gap. There's a lot of stuff here to digest. There's a lot of stuff here, right, to pay attention to, right? So we had SMT, right, being confirmed on a new week opening gap with a precision swing point, trading below these lows, which we already talked about. While above the price, right, the previous price action, we had these highs, which were not caused by SMT. Obviously, you would be looking at the dollar, to get your bias in almost everything, right? So when you have this precision swing point forming here, right, and at times, right, if you don't always have to be looking at anything else, right, in terms of new week opening gaps, new day opening gaps, if you're trading forex or anything, right? Just be focused on the dollar. So here, right, also you have price trading above this high. Note that we were above the new week opening gap for the pound, right? But we traded here, and this is what caused the sequential SMT. The pound was overbought, right? Way overbought, right? And then we end up trading above these highs as well, which are important, right? So, going forward, where does, high probability turtle soup usually occur, right? Whenever you have SMT, right? And then you have sequential SMT, or, just a stop run with a precision swing point, which all of this must be happening, you know, under a higher time frame cycles sequential SMT. So this sets the stage, right? This is the base of it, right? If you're using the weekly cycle, right, and say this was Wednesday's high, this is Thursday's high, it would be the same thing, but it's just on a higher time frames cycle, right? It's fractal. This is basically what usually happens, right? This is what happens when you have consolidation and expansion. This is what causes it, right? Remember, right here, right? This little, section of price action right here, right where you have the SMT lows being taken out with a precision swing point on a new week opening gap, right? You could put, where could you put your stop here, right? Due to the fact that you had a precision swing point right here. You had a precision swing point right here, right? We ran SMT lows. There is sequential SMT on the higher time frame cycle, right? Here, you have highs which were not formed by sequential SMT or SMT, right? This would be liquidity. This would lead to price having a low resistance liquidity run, right? Price will not have any problem to just reverse. This section of price action could be replaced with sequential SMT, right? So for example, right, this could have been, which it was, the first quarter of the New York session. This could be the second quarter of the New York session, and price could have ran below this low, right, and which could have caused SMT to happen in another pair, right? So this, which is stage 2, can be one of two things, right? It can either be this, what you see happening here with a precision swing point, right? The new week opening just makes it more probable, right? So we don't care about order blocks. We don't care about breakers, right? What we care about is fair value gaps, of all types, balanced price ranges, new week opening gaps, new day opening gaps, highs and lows, sequential SMT. A precision swing point is not necessary for SMT, right? So once you have at least two sequential SMTs, right, a higher time frame cycle followed by a lower time frame cycle, right? Like for example, whenever we usually have, a one shot, one kill, it's usually under the, sequence that you had the weekly cycle, right? You had sequential SMT between the weekly cycle, and then you have it within the daily cycle, right? So it's weekly cycle, daily cycle, weekly cycle sequential SMT to daily cycle sequential SMT, right? Trying to not make it hard to understand, right? You basically, you need, okay, so what would that be? That would be two stages. Stage 1, weekly cycle sequential SMT, and this is, tailored for the one shot, one kill model. Then what happens afterwards? Daily cycle sequential SMT. So right here, right, there was no lower time frame sequential SMT, but there was a cracking correlation, right? We had these highs, right, for the euro taken out, these highs for the pound taken out. Right after these highs were taken out, sequential SMT was confirmed when the British pound traded above this high. The euro did not. Meanwhile, the euro traded into a new weak opening gap, and the pound did that as well, which caused the formation of a precision swing point. So you can actually take these, things and try to build your own model, toy with them, study them, right? But, these are things that you must focus on. For example, these highs, which are not regular highs, these lows, which are not regular lows, new weak opening gaps, right? And what would lead to a low resistance liquidity run? Symmetrical highs. So symmetrical highs should not be used for entries. It should be used for exits. You want to enter above unsymmetrical highs, which are these. And you want to enter below unsymmetrical lows. I hope that you guys found something useful from this. right? I hope that it wasn't too difficult, for you to understand. If it was, I would like to hear your feedback, right? Because if this was difficult, then next month will will be crazy, right? So, right, you literally can follow the model right here with the Great British Pound, right? I didn't write, just write everything down because I know that someone's just going to screenshot it and post it everywhere, which I don't want to happen, right? Definitely don't want that to happen. If you don't know what SMT mean, this would make no sense to you, right? This would not make any sense to you. Because what? The unsymmetrical highs right here is SMT. This high, took out this high, which led to price falling, was sequential SMT, right? These lows are symmetrical lows, right? Symmetrical lows and highs are what you should be using for your draw on liquidity, right? So due to the fact that we had SMT here, the draw on liquidity would be wherever we have symmetrical liquidity line. Unsymmetrical highs and lows are usually used for reversals, right? You can have unsymmetrical highs and lows, right, being ran out. And this could also cause sequential SMT in a lower time frame, right? For that, you would not need a precision swing point. But due to the fact that we had no lower time sequential SMT here, right? This high was taken, this one was taken, this low was taken, then you would need a precision swing point under, right? A under the you need a a higher time frame sequential SMT to kick this into action. You will discover most times that you would usually have, right, these types of moves, starting from a new week opening gap, right? And this is the way how you can confirm that a new week opening gap will reject price. As you guys can see, we are talking about no higher time frame levels. It's basic. It's just time highs and lows, gaps, right? We're not talking about order blocks, and we're not talking about breakers because we have passed that stage, right? We literally all we need is three correlated assets, right? You can use two as well, but three is better, right? So you have three correlated asset classes, right? You could you can be on your time frame of preference, right? So you would basically just need to be watching for example, for this, you need to be watching the daily cycle, right? You'd be watching the daily cycle, and you'd be looking at new week opening gaps, right? And remember, right, price moves from new week opening gap to new week opening gap. So right here you can see from this new week opening gap, price just flew through this new day opening gap. And when it went to the other new week opening gap, what happened? Price just completely reversed, right? So I hope that you found this useful. There's a lot of things that you can unpack and basically make your own. right? And also pay attention, look at this new week opening gap. You can see that we had a the formation of a precision swing point, right? And this is what we talked about here, right? So this is a new week opening gap. These highs, look at them, right? This is what? These are unsymmetrical highs, right? These lows were, you can see that we had price trading below this one, right? Well, it barely did, but it did, right? More than likely be this one. So let's focus on these lows, right? So price traded below, right? And it doesn't matter if it just barely goes below, right? Once there's a low which is not symmetrical, and then afterwards, right, we have a precision swing point which happened right here, right? This is a precision swing point. This is a new week opening gap. So this is a form of, let's say reversal. So you need a new week opening gap, right? You need a precision swing point and you need unsymmetrical highs or lows to be ran through, right? What, also you can look right here. Let's make this different color, green. Oh, I don't even know which color to use. Doesn't matter though, but gotta see is great. So here, right, this fair value gap right here, right? Price traded up into it, right? Remember we talked about this before. This is, an SMT fill, right? Price traded into this fair value gap after the precision swing point form, and we had unsymmetrical highs being taken out, right? So this high is taken out, precision swing point, new week opening gap, price fell. Then what happened afterwards? Price filled here, this fair value gap. But what happened here? And just for your edification, right? I'm going to use the cursor, what's it called? Whatever it is, this thing. So, to make you see the corresponding times of where the fair value gaps were formed, right? Here, right, whenever you see price like this, right, remember wicks are gaps, right? This is something to clear, up this for some of you. Wicks are gaps, right? Wicks are gaps. So whenever you see a gap below another gap, you just combine them, right? Just combine them, basically. Anyways, here, and then here, we could see that price filled this gap. So here, this is the SMT fill, right? Which takes place after we have at least two stages, right? You need at least two stages for this to make sense. And, we're going into a lot of different things right now. So price runs through a unsymmetrical high. There is sequential SMT, a new week opening gap. Price breaks down, SMT fill, drops, right? This would be what caused price to reverse. So there'll be times when there's no sequential SMT, right? No sequential SMT, but there will be, you know, things like this happen. So when there's not sequential SMT, then you can look for, these things, right? A combination of the cracking correlations that we've spoken about. What we are going into, right? It's not patterns, right? It's different gaps being filled at different times while, it's not filled within another asset class, right? So it's not just, okay, I'm just going to look for sequential. You can do that, right? But there are other ways to find something useful to do. And these are more advanced, topics which we will dive deeper into, right? We are slowly, going into something else that's not quarterly theory, because quarterly theory is the base of everything that we do, right? Quarterly theory is the easy way, right? Quarterly theory is something that, everyone should be able to understand. A higher time frame cycle sequential SMT followed by a lower time frame cycle sequential SMT. Then you need a third stage, which could either be, a precision swing point confirming the sequential SMT on the lower time frame, or you have SMT fill, or you just have a a real market structure shift, right? Which would be like this here, right? So this low, right? Why wouldn't it be this low? Why is it this one? It would be due to the fact that, right, we did not have this high traded above, while this one was, traded close to, and this one was actually breached. Right, so this would confirm the market structure shift. Okay, gears have changed, right? Gears have changed. We traded above here. We failed to trade above the here. So this was a market structure shift. Then what happened afterwards, right? Price did not fill this gap, just continued to rally higher. Right, so here we have one stage, right? Price traded above SMT highs, right? Unsymmetrical highs. The formation of what? A precision swing point within a new week opening gap. SMT fill. Then we had an actual shift in market structure here. But it did occur here, right? When price traded above this high in the euro, but it did not trade below this low in the dollar, and did not trade above this high in the British pound. Right? So it's not just, Michael showed you guys this alone, right? Basically, all he showed you was this 2022 model. What did he say? Price breaks below a low, you wait for a market structure shift, and then you buy the fair value gap. But when does that work? It's here. SMT fill. What is that? This gap being filled in the dollar, this one being filled in the euro, and this one not being filled in the Great British Pound. That's what SMT fill is. Again, if you can't understand that, let's say it again. This one being filled in the dollar, this one being filled in the euro, and this one not being traded to in the pound, right? That's what it is. here, before there was a SMT field, what happened? Okay, what happened, right? Can you see what happened? Right? We had price trade here, and let's do this. Right? We had price trade here, then traded back here into, the fair value gap. Here, again, I'm just saying this one last time, we had price do what? Fill this gap. And here, it did not. When this happened, this confirmed that we were bullish, right? And when this did not happen, well, this did happen, right? So pretty much that's what you would be looking for. Right? And if I don't talk about something, it's not important, like volume imbalances are, not important. Not important at all. Right? And today was, we didn't have the, even look at the dollar right now. Look at this. Right? This is not clean price action. And this is due to the fact that, we have all of this, all of these issues going on, right? And speaking about the, you know, geopolitical issues. Okay, you can see how price just gapped right here. Right, this is a telltale. This doesn't happen a lot. This happened while we were literally, just talking. This does not happen a lot. Right? So, yeah, low probability conditions. Wait for a clear general liquidity. Wait for, a higher time frame cycle sequential SMT. If we don't have that, then we do nothing. We wait. Right? Because remember, there are times when we have week after week, day after day. Everyone's like, look at this. We found it right here. But there are going to be some times, right? Right now, where you will not, see clear price action. Right? But these are the times that will test you. These are the times that will make you a better analyst, which is what you should be striving to do. Right? Because once you know where price is going to go more times than not, then you will by default become a better trader. So until next time, I hope that you, took some thing from what I've said here. I tried to like say, certain things in code, but it didn't work. Just ended up saying it. Anyways, right? There's a lot of gems, and we'll be more, specific once we move to WAP. I gotta like want a phone call after this and see what they're dealing with. Why is it taking so long? So yeah, I will speak with you guys if it's not Saturday, Friday, but for sure we're gonna speak again on Sunday, right? I hope you guys have a wonderful afternoon, well, or night, wherever you are. Goodbye.